Breakout patterns are some of the most useful patterns you can use in the stock market to spot potential winning stocks, right? Stocks that can generate gains of 10%, 20% in a couple of weeks, sometimes even months. Right, so in this video, we'll be talking about breakout patterns, right? But firstly, what is a breakout? What is a breakout, right? So we'll cover a breakout first of all, and then we look at some of the patterns, some of the key patterns that you can try to spot or monitor and put the stocks in your watch list to really maximize your gains in the long run, right? So we look at some live case studies as well, alright, so you can kind of seal in the concept. So if you want to find exactly what is a breakout patterns trading strategy, right, make sure you watch this video all the way to the end because I think you have a much clearer picture. Let's go. Okay, so firstly, what is a breakout? That's the key, right? So a breakout, just to keep it in simple terms, is whereby we see prices, right, approaching one of those key levels. So it could be a resistance level or a support level. So a resistance level is where every time the price kind of hits to that level, it comes back down. So it touches, it comes back down, it touches, comes back down. So that's where we are seeing a lot of selling at that level. So that's like a resistance level, right? So a breakout can come in the form of prices, right, of this particular stock breaking that resistance level that it has been pretty much kept below over the past few months or past few years, right? So that's what we call a breakout. So when that actually happens on some really bullish price actions, we can start to see a little bit more momentum or the upside continuing, because all this while sellers have been there to defend that level and push prices down. But when we see that breakout, it shows that buyers are pretty much prepared to take it above that heavy selling level, that sell zone. All right, and then when that happens, that's where we see a breakout. Of course, so a breakout can come in many forms. There could be many patterns. We look at one pattern today. I'll come to that in a bit, but that is pretty much a breakout on the upside. All right, what about a breakout on the downside? So a breakout on the downside, you can also call it a breakdown, right? So a breakdown of a support level. So a support level is whereby you see a lot of buyers coming out to protect that price level. It comes back down to this level, it rebounds up, it comes down, it rebounds back up. So many times, 3, 4, 5 times, many times that's rebounded from this what we call support level, right? So that's a very good support level. But if it's so good and yet it breaks down that level, right, it shows that sellers are pretty much prepared to take prices lower, all right? And that's where if it breaks that key support level that has been holding for many months or many years, then you want to be careful. That's what we call a breakout on the downside, or you can just call it a breakdown. All right, so that's pretty much the meaning of a breakout, all right, whether is it to the upside or to the downside. All right, so let's take a look at patterns that can fit this breakout strategy. Okay, so let me share with you just one pattern that can fit this breakout strategy, or one of those patterns that kind of really fits really nicely for breakout. And if we see this pattern and a breakout, that is where there's very high chance of riding the upside, or very high chance that this stock will continue to push higher, right? And that is none other than the ascending triangle pattern, right? So when we're seeing a stock moving up in an uptrend, sometimes it might happen when it's coming down a little bit, but mostly we want to see an uptrend as it consolidates slightly, all right, below a resistance level, and then we see that breakout, and that's where that move start to see the uptrend move up much more faster, right? So that's how it works. So this is what we call an ascending triangle pattern right here. We have what we call a horizontal resistance line. That's a red line, as I mentioned. The resistance is where there are a lot of sellers coming back. It touches, it comes back down, touches, comes back down. And we have also what we call an upward sloping green line. So let me just go to draw it for you how normally prices will go in an uptrend. So normally we can see like prices moving up, down, and an uptrend. And that's where we might see a little bit of consolidation along the way. We might start to push down, up, all right, and that's where you see a bit of resistance. Sellers come back, push it back down, all right, start to rebound back up again, all right, but it touches the same resistance level, and sellers came back and pushed it back down. So it might start to hit down a bit, buyers came back to push it up, so it might start to consolidate here, right? But you can see as it moves down, it tends to kind of consolidate and find a new low, a few new low, and eventually it kind of breaks this resistance level right here, right? So this is what we call an ascending triangle pattern. Let me just change this to black in color before I explain to you right here, right? So this is an ascending triangle pattern. As you can see, right, in an uptrend, it might start to move up, and along the way, the sellers might want to take some profit. That's where it hit kind of like a resistance level. So you can see that this is a resistance level right here. You can see it touches about like one time. So one time, let me just put in red, 1, 2, 3, 4, right? So it took 4 times, right? For 4 times, it kind of like touches that level and it comes back down, right? So that's where, at that level, as it nears it, sellers can actually come back to push it down. So you can also kind of take some profit near there as well. It's perfectly fine because that is where we can see heavy selling, right? But the key here is this, right? We can see that as it trades lower, right, buyers are coming out to buy at higher prices. To buy at higher prices. That means eventually, I mean, look at this, right? Initially, it was somewhere around this low, all right? It went up, it came back down. So this low right here, right? So this is like number 1. Okay, let me just go to draw it for you. For example, this is like the low of number 1, all right? This is number 2, and this is number 3, and this is number 4, number 5, right? So you can see that each time, for number 1, the low is somewhere around here, lower, right? Number 2, you can see that this low is higher than the low that we've seen in number 1. Does it make sense? That's the trial, right? So the trial is pretty much getting higher, right? And number 3, same thing, it went up, came back down, and buyers came out to defend that level. That means they are prepared to buy at higher prices, right? It didn't even allow it to go back to the low of number 2, right? Somewhere around that, somewhere around the midpoint, the 1/3 or 2/3 point, right? Buyers are out to defend and start buying. So that's the rebound. Same thing, it went down again to number 4, and number 4 is higher than number 3. So as it hits lower, you can see it forms what we call higher lows, right? This shows that buyers are pretty much prepared to come in to buy at higher prices. So it's a good sign of strength, right? But the thing is that each time it rebounds, we are still kept below this resistance level, right? So this level could be a psychological level, and it could be $1, $5, $1.20, $10, right? It doesn't matter, but that is a firm resistance level whereby many times we touched and we came back down. So we can actually expect selling to come back as we hit to that level again, right? Which is normal, right? We have seen it like sell down. So right over here, we might actually see it come back down again. But you can see that as we form higher lows along the way, we kind of hit towards a pivot, right? A pivot right here. This is like the point whereby it gets tighter and tighter, and eventually when we see prices kind of breaking above this resistance level right here, let me just draw it for you right here at this point in time. You can see that as it breaks this resistance level with this ascending triangle pattern formed, right, and completed, that is where we can potentially start to see more upside right here, all the way, it can be 5%, 10%. So we might start to see a bit of push up all the way up, and you might see a little bit of profit taking, it might come back down a little bit, consolidate before attempting to push higher again. So that's what can happen in an ascending triangle breakout strategy, right? So how do we want to trade this strategy, right? So what we can do is that we can wait for this ascending triangle pattern to completely form up. So most people would like to think that it is an ascending triangle before it even play out. So you might think that somewhere around here, or number 3 or number 4 or number 2, it is like an ascending triangle pattern. But the truth is, nobody knows until it completely plays out. So you want to wait for it to, kind of form up completely. It breaks that resistance level right over here, right? So in this case, if it does break the level, it stays above. We see the volume is pretty decent volume. That is where the uptrend can continue much further. The momentum is there, and that's where you can think about getting in to ride the upside, because many times when this happens, all right, especially if the volume is strong and the uptrend is firm, that's where you can see this stock really push up fast, right? It can be up to 5-10% in a couple of weeks, or sometimes months as well, right? So this is where you can think about getting in only when you see that break of this key resistance level. So this is what we call a breakout strategy on the upside with the ascending triangle pattern, right? So let's take a look at a case study to see if we can spot this pattern, and what is the plan that we can deduce or draw to potentially trade this type of setup. Okay, so I've spotted the one stock, right, that came into my watch list whereby there are some signs of an ascending triangle breakout pattern, right? But it has not completely formed up yet, but as I see it right now, there are some signs of this pattern forming. But as I say, we want to wait for some good, clear confirmation, right, before actually taking a trade, right? So let's take a look at this case study of this stock and see if potentially we might actually see that pattern happen, and if it does happen, what are the steps we can actually take. All right, so this stock is right here called SMMF Submit Financial Group in the US market. All right, and you can see this is the pattern right here. All right, we have been pretty much trading below this resistance level at about that $28. Look at this. As I say, that resistance level is a level whereby a lot of sellers are coming back. A couple of years, for like 2-3 years, we have been trading below that level. 28, it came back down. We neared it, we came back down. Neared it again, we came back. So about like 3, 4, 5 times we have been nearing this level, and it just comes back down. It just shows that sellers are there. All right, you can look at the market app as well, and sellers are just there to defend that level. It's just very hard to get above that level, right? And there's just too many sellers for now. All right, but if it does break that level, I mean, it's so strong, right? I mean, if you're saying that many times it comes back down, so it's really, really strong. But if it does break that level, it can show that buyers are serious to take out that level, right? To take out all the sellers in the level, buy up all the shares, buy up all the sellers, and that is where it's like free to go, right? It's like an expressway, right? From like the traffic light, it's like free, it's green light, and it's now an expressway to go if we actually break that resistance level. Does it make sense, right? So we won't wait for it to completely play out first. We want for it to break that level convincingly on some good volume before potentially taking a trade, because that's where, if you're like just buying near that resistance level or just below that level, we can actually see selling, which is normal because that's what we have been selling for the past few years, right? All right, so we want to make sure that we break that level before thinking about getting in on this ascending triangle breakout pattern strategy, right? So let me just show you what this is right now. So you can see that this is an ascending triangle pattern strategy. We can go ahead to draw what we call an upward sloping channel support line right here. Does it make sense, guys? Does it look at what I've drawn previously? Look at this right here. This is what we have drawn previously. We have an upward sloping channel support line connecting all the lows, forming higher lows, right? And we have this resistance level whereby it touches, it comes down, touches, comes back down. So this is the ideal, right? Ideal diagram, of course, you want to see. But of course, in real life, it doesn't always happen so nicely, right? Sometimes you might see a little bit of a pullback around the midpoint. It might come back down to this channel support and rebound back up. It might not even go to the resistance somewhere around here. You might start to see a bit of a pullback already, right? So this is the ideal pattern, but if we can see this, that's good. If not, if you can spot something like this, that's good enough as well, right? So let's see if we can spot it right here in this pattern. This looks something like an ascending triangle pattern. So we can just go to draw it for you right here. You can see prices come like consolidating a bit, right? Move up, down a little bit, up. All right, so that's where we hit to the same resistance level I talked about, right? And start to push up a little bit, all right? And that's where it came back down, rebounds up, and start to consolidate right here. Does it make sense? All right, so this is what we call an ascending triangle pattern, all right? And it's made clear because you can see that this resistance, $28, have been pretty much the cap, right, since like 2018, right? All this while we have been trading below. All right, of course, as I say, right, this diagram, right, doesn't look as nice as what we have drawn previously right here, right? Because it doesn't look like, it's like moving up and down. Of course, as I say, if you want to see it really nicely, then you want to see move up and down, up, down, up, down, and eventually it does break, right? But it doesn't happen all this while, right? So, but there are some signs of an ascending triangle pattern formed because from the lows, we can see that it is forming higher lows, right? It's swinging high and low, but as it comes back down, buyers are coming back up at higher prices to start buying and start to rebound back to that resistance. So only when we break that level. So I mean, some people might ask me, hey, Joey, when will it actually break that resistance level? In this case, it is at $28 level. I mean, will it break tomorrow, next week, next month? The truth is nobody knows, right? Nobody knows, right? So you can kind of like set an alert at $28.10 or $28.05, 20 cents, right? As it breaks the level, that's where you can be alerted to take that trade, or you can set what we call a buy stop limit order as well. If it does break the level, it hit like 28.10, you can lock in the position immediately, right? But normally what we want to do is we can set an alert and we want to see some good actions as it happens. The volume is strong, and that's where you can take a trade potentially to ride the upside fast, right? So when we see that break of this level, for example, right, it starts to consolidate and eventually it breaks this resistance level right here. That is where potentially, all right, we can take a trade right here, right, as it breaks this resistance level at that $28. Does it make sense, right? Like what I mentioned, right? You want to see it break the resistance level, stable for a few days. You want to get a bit more confirmation, volume is strong, and that's where you can potentially take the trade to ride the upside. So I say push up, right? Doesn't mean if you see this, it breaks, it means you will just go all the way up in a few days. No, right? I mean, it might start to push up over the next 1-2 weeks. We might see a little bit of consolidation right here, all right, and somewhere up around along the way, sellers might want to come back, take some profit, might retrace back down again, consolidate again, and it might start to push higher again. Right? But the key thing that you want to take note in this ascending triangle breakout pattern is this, right? So this was the resistance level that we've talked about, right? That has been kept below for many months or years, right? So when it break that level, that is a good sign. So that's where you can take a trade, a short-term trade up to ride the upside. You want to protect your profits upwards, all right? Take profits along the way, that's fine. But the key here is this, right? This resistance level, okay, will now become the new support level. Look at that, I've changed the line to green in color. So it was originally the resistance level red line, but as long as we trade up, we see a bit of profit taking, it comes back down, and as long as we stay above this new support level, that is where this stock still looks good to go in terms of the uptrend. It can consolidate and it might still hit higher, and this whole entire ascending triangle pattern can still continue to play out. So as I say, right, we might consolidate, like here you can see we push up, consolidate again, and eventually breaks the resistance, and that's a new phase of upside, right? So this is the ascending triangle breakout pattern strategy, right? Many times you want to, if you spot this pattern, that's where I think you definitely want to take note of it. You want to set an alert, because many times when we see this pattern and we see a good breakout, we see a firm move at that resistance level, good volume, right, good price action, good candlestick, that's where we see a confluence of other factors coming in. There's very high chance of winning for that particular trade. All right, so this is the breakout ascending triangle pattern. Alright guys, so I hope you have liked this video so far, you have gained some value. If you do, go ahead to give me a like and a thumbs up. It will definitely help out the channel, and thank you so much for doing this. Of course, smash the subscribe button as well if you have not yet done so that you will not miss out on any videos like this. Alright, so let's take a look at the next breakout pattern strategy. So we have pretty much covered the upside, whereby I talk about the ascending triangle pattern breakout, and that's where we can see huge upside fast, especially when all other conditions are met, right? But now we'll be talking at the same thing. We're talking at a breakout strategy as well, but this time it is to the downside, right? So what is that? That would be the descending, DESCEND, the descending triangle pattern breakout or breakdown, if you want to call it, right? So let me just go to explain to you the diagram before we look at some live case studies as well to seal in the entire concept. So this is the diagram for the descending triangle pattern breakout or breakdown strategy, right? So when we see a pattern like this, right, it can show that if we break a particular firm or strong support, that's where huge selling can actually come back fast. Sellers might start to rush in to sell all this stock, and we can see this stock really go down fast. So you want to be careful, especially if we break certain support level. You can potentially get out if you're holding on to long positions. You're still holding on to it, you want to get out or reduce your exposure, or you can think about taking short positions. That means to sell, to short and ride the downside. So that it's short, it goes down, you buy back, you make money while you ride the downside. And you can do that using like CFD as well. It's perfectly legal. All right, so this is the descending triangle breakout strategy. Let me just go to show it to you, right? So we have what we call a very strong firm support right here, green line, all right? And we have a downward sloping channel resistance, and most of the time prices will go like this, right? Start to move down, all right? And we see a little bit of a support, but it might start to come back, it rebounds, and it hits to this level, which is what we call the channel resistance, comes back down, hit the support, rebounds. All right, sellers comes back, and push it back down. All right, start to hit to that support, go up again. It swings down again, swings up, swings down, and eventually it tightens so much, and it breaks this support level. This is what we call a descending triangle pattern breakdown, right? So let me explain to you this whole pattern before we talk about the case study, right? So you can see that as it moves down, all right. Right here, it rebounds up, hit to this level, it hits down to this support level. So this is a key support level that has been holding. It could be a few months, it could be a few years, and many times it rebounds to this level. But the key here that you want to take a look at is this level, right? So this is what we call the resistance, whereby sellers are coming back, all right, to buy at to sell at lower prices. So each time it rebounds, you can see that sellers are coming to sell, and it goes down, it rebounds back up again, and sellers are coming back to sell again. So it didn't really rebound back to the previous high here, right? Just somewhere around that halfway mark, or 1/3 or 2/3 way, sellers come back to sell it ready, right, to sell it lower. All right, same thing, went down, rebounds, and sellers are coming to sell it. So each time it sells lower and lower. That's what we call lower highs. It shows that sellers, they don't even want to wait for it to go back to the previous high. They just want to take, they just want to take a short position, or they want to just get out first and sell each time it rebounds. All right, so that's a sign of weakness. It shows that sellers are pretty much in control. All right, and buyers don't have the means to push it back up to that previous high, it just moves up a little bit and sellers came back, right? It doesn't push back up to that previous high. So you can see that lower highs, and lower highs, and eventually, buyers just couldn't, do it anymore. It couldn't push it back to the previous high, and they just gave way, right? They gave way at this support level. So this is the support level whereby, buyers have came up many times just to defend it. It rebounds. So at this point in time, right, we wouldn't know that a descending triangle pattern is formed only when we see a completion of it. And when would it complete? Right here, right, when we see that breakdown of this firm support level, right? Only when we see that breakdown of this firm support level, that is where this descending triangle pattern breakout has formed, right? And that's where we can take like a short position to ride the downside, or if you're holding on to any long position, or you're holding on buying it, and then you want to think about getting out, because that's where we can see the downtrend continue. Especially if it's a downtrend, that's where you want to be careful, or that's where we can see some heavy selling, right? So this is where if it does break this this support level right here, that's where you want to be careful. Especially it might start to head down. All right, and what happens is as I say, it heads down, buyers might want to start to bargain hard, they might start to rebound a little bit. All right, go up, trace back down, and consolidates. And you can see eventually we might start to just trade even lower, right, as it breaks this new support level, right? So that's what can happen, right? And as long as we stay below this level right here, the support turn resistance level, let me just change it to red in color. You can see as long as we stay below this level, that's where more selling can actually happen, right? So this is the descending triangle breakout pattern. If you see it, definitely you want to be careful, especially you're holding on to stocks like this when that key support level is just not able to hold anymore. Right, so let's take a look at a live case study to see if we can spot this level and what are some of the plans, the trade plan that you can do, right, to trade this particular stock if it does break down. Okay, so there is a stock here that I've spotted that kind of like shows some signs of a descending triangle pattern and a potential breakdown, right? So it's not completely formed here, as I say, but there are some signs of it. So we can kind of like see whether what is the potential trade plan that can be taken if it does actually happen and break down, right? So we can draw what we call a horizontal line, because as I say, there would be a support level, all right, and a breakdown, there'll be a very firm support level that has been trying to hold over the past couple of months. So in this case, it has been holding for like more than a year above this support level. Let me just change this line to green in color, you can see, and that would be the $21 level. You can see, right, many times it kind of like touches, it rebounds 1, 2, 3, 4, 5, 6 times, about 6 times it touches this support and it just rebounds. It shows that buyers are there, right, to kind of defend that level. That's a good thing, right? It kind of rebounds from it, but as it rebounds, the key here is this, right? It rebounds, and as it rebounds, you can see that buyers are just rebounding it to a little bit not as high as the previous high, and sellers came back to just push it back down. So you can see this was the previous high right here, 1, 2, 3, 4, 5, right over here, 6, right? So yeah, I mean, somewhere down you can see that it's getting lower and lower. So we can actually go ahead to draw. Okay, let me just remove this for you. We can actually draw what we call a downward sloping channel resistance line right here. Okay, so let me just draw it right here. So this is what we call a downward sloping channel resistance line. You can see as it gets lower and lower, forming lower high. So that's a sign of weakness, because the high is just not getting to the same level, or maybe to the previous high. It's just getting lower and lower. All right, but the key here is this: we still want to wait for a confirmation of a breakdown. Right, so now we are seeing like a bit of a descending triangle pattern, right? Just like moving down a little bit. All right, so to move up, down, up, down, up, down, up, down. So you must have to consolidate here, right? And eventually, right, if it does break this level, right? So right now you can see it's still not completely formed, but if we do break this level right here, that $21, especially if it gets tighter and tighter, that's where you want to be careful. If we break that $21 level right here, you can set an alert, all right? If we break at 21, it goes to like 21. I mean, it goes to like $20.90, 95 cents. I mean, below that $21. That's where you want to be careful, because that's where the selling can actually happen fast. We might see this stock really accelerate downwards in terms of the downtrend downtrend, right, starting to form up fast, right? You can start to hit down to like $20, $18. Alright, so that could be the downside move, and we could actually build a plan in terms of trading the downside if it does happen. And we can, right here, there's a short position that can be taken, alright, whereby if it does break down here, alright, you can have a stop loss. So in case it starts to rebound back up above this like $21, you can think about a plan to get out, right? But what is the downside reward, right? So downside reward can be anything to like $18 to $19. It depends on the consolidation. Here we can use that as a gauge. So you can see that the range has been pretty much from 21 to 24, about $3 to $4. So in terms of the breakdown, it could be $21 down, which is 21 minus 3 or 4, which is about like $17 to $18. So that could be the downside reward which you can potentially estimate, right? You can see that the reward to risk ratio, right, based on this is about 3, more than 3, 3.5, 3.6. So that could be the plan to kind of ride the downside, right, if it breaks this support level, right? So this is the descending triangle breakout pattern strategy, right? If it does see a breakdown, that's where you can see more weakness. So another point that you want to take note of is this, right? As I said, this is a firm support level that's broken down. So if it does break this level, you want to give emphasis to it such that this support will now become a resistance level. So we're going to turn this to red in color just to give it a bit of perspective. So this would be now the resistance level. If we stay below this $21, right? So actually like it might come down, buyers start to rebound, it might rebound back up again, but it might consolidate and eventually it starts to just break and hit even lower. So that's what can happen, right? In a downtrend, especially if it breaks that support, and it stays below this new support and resistance, selling can actually continue. And if you're holding on to counters like this, definitely you want to think about getting out, reduce your exposure, or maybe even think about shorting companies like this. So one of the key mistakes that people make is to kind of like second guess or to predict that it would be an ascending triangle or a descending triangle pattern breakout. So as I say, we want to wait for clear confirmation, right? And even if it does break down, I mean, like let's say right here in this diagram, we see a very, very firm and nice pattern, and it does break down this like support line, right? This support line right here, right? There's a very, very high chance or high probability of it actually moving lower. But is it like guaranteed that because it breaks down and we see the descending triangle pattern, it will hit all the way down? The answer is no, right? There's no 100% guarantee, but because of this pattern and it breaks down, it can greatly increase the probability of it moving lower. But there's no 100% or even 90% in the stock market, right? If you see it, right, you still want to have a plan, because if it does break and come down and move back up above this level, that's where a reversal might actually happen. So if you take a short position, that's where you want to have a plan to also get out in case it breaks back above this like level right here, right? So just take note on this, right? It doesn't mean that if you see this pattern miss, you will just hit all the way down, you'll crash and all that. Not necessarily, all right? Many times we will see weakness because of this pattern, because all this while sellers were pretty much in control, and eventually the support gave way. Alright guys, so there we have it. We have pretty much covered two ultimate breakout pattern strategy that you can use, or you can try to spot patterns like this to greatly increase your odds of winning. If you're riding the upside, it will be the ascending triangle pattern. If you're riding the downside, it will be the descending triangle pattern breakout or breakdown. Alright, so these are the two patterns that I like to share with you in terms of the upside or downside. I think if you've watched this video all the way to here, you have a clear picture on how it works, how to actually spot patterns like this, and what does it mean by seeing this pattern, and when do you actually want to take action. You don't want to second guess it, you don't want to predict it, you want to wait for it to happen. And if it does happen, that's where you create a plan to ride either the upside or the downside, right? So that's it, right? So I hope you like this video. All right, if you do like this video, guys, I appreciate if you can give me a thumbs up. It will definitely help out the channel, and of course smash the subscribe button as well, and so that you will not miss out on any videos like this, right? So Joey here, thank you so much for watching, and let me know in the comments below what is your biggest takeaway on this breakout pattern trading strategy. What have you learned? Let me know in the comments below, so that I'll do my best to answer each and every one of you. And if you want to find out a little bit more on my whole entire strategy, I mean, for this particular video, of course, we did not talk about some other factors like the indicators, the trend, and all the other confluence of other factors that needs to come in to greatly increase our probability of winning even more, right? But if you want to find out a little bit more on the whole entire framework and strategy that I use, you can attend one of those free web class that I'm still conducting called One Good Trend, in short, One GT, right? So I'll probably place the link below this video. Go to attend this free web class to learn a little bit more on the entire framework behind a system that I use to kind of like pick companies or stocks like this that show patterns like this and guides us on entry and exit as well. So I look forward to see you in more of these web class. If you have not yet attended, right, the link will be below. Joey here, thank you so much for watching. I'll see you soon.